Everybody, welcome to HAMB's webinar today featuring Sue Savio with Insurance Associates. We're going to give it a couple more moments while everyone keeps logging in here. We can see folks still coming on. How you doing today, Sue?
I'm doing fine. And how about you? Life good?
Life is very, very well. I'm so excited. We've got the new year in full swing here. How was your holiday season?
Good holiday season. A busy one. A lot of renewals in the first quarter of the year. So maybe a holiday for most people, but we were working.
So it sounds like you did not take a holiday trip. You were just tied to the desk.
No holiday trip, dear.
Well, I will say, Sue, that you are definitely the hardest working insurance provider that I have ever seen. You're the only one that if I call you at 7 p.m., you're calling me right back because you're actually on the other line and finishing up one call and still picking up calls late into the evening. How do you do it? How do you get that kind of oomph?
Owning your own business is forces you not well to, and I enjoy the job. So not only owning it, but doing a job that you really like. It doesn't seem like a lot of hours. And as you get older, you need less and less sleep. So you know what? 5 hours a night. The rest of the time I can be spending at work. And and if you enjoy your job, then it's not really like you're at work. So for me, it's a great business. It's been a great career, and I hope to do it at least for another 20 to 25 years. So watch out, world.
Oh wow. That's right. You've got a lot to contend with Sue at the helm. That's awesome. I love that work ethic. And you're right, as we get older, it is harder and harder to really stay tuned in and to perform your best every single day. And so to watch you do that is just amazing and very inspiring. Thank you so much, Sue.
People think I'm crazy. And I tell them to read about my retirement when they see it in the obituary. So, that's my goal.
What about, so you didn't get to take a trip, but what about some family time? How are the grandkids doing?
Grandkids are doing fine. They did come up for the Christmas holiday. And so if they come for a holiday, usually I don't go to see them, but 2 of them live here and 2 are in Hilo. So between Hilo and here, that's about the only tripping I do.
Oh, perfect, perfect. We did get a little bit of sunshine over the weekend, but over the holiday, but of course the last couple of months have been tough. Raining almost every week. So it'll be beautiful like today, right? Wednesday's gorgeous. And then come Saturday, it's hide inside and go to lunch day.
Isn't that true though? Weekends are not beautiful. So you might as well go to work.
That's right. Exactly. That's what we've been doing, right? Is working on Saturday and Sunday since the weather provides the shelter to be indoors. All right, everybody, we are at about 100 attendees right now, right about 10:04. Let's go ahead and just get some introductions done. So again, for everyone that just joined, thank you very much for joining us today. Hawaii Association of Mortgage Brokers is so proud to present Sue Savio today, Insurance Intelligence, Insurance Update for 2026. Let's start by just thanking our very important sponsors for allowing HAMB to bring this to you today. So our platinum sponsors, Freedom Mortgage, The Loan Store, New Res, DeKind Lending, Penny Mac, LendSure Mortgage Company, Deep Haven, Remen, and our gold sponsors, Finance Factors, Title Guarantee, Advantage Credit Reporting Services, Home Express Mortgage Company, Angel Oak Mortgage Solutions, Acra Lending, Foundation Mortgage, and of course our silver sponsors, Open Mortgage Wholesale, Sierra Pacific Wholesale, Cardinal Financial, Logan Finance, and ARC Home Loans. thank you all to our sponsors for being a part of HAMB and allowing us to truly bring these educational experiences to our membership as well as the industry as a whole. And today we are here with the renowned Sue Savio, president of Insurance Associates here in Hawaii and of course beyond. And, you know, just commending her on her many, many years of service, her immense expertise in this arena, her wherewithal and work ethic when it comes to servicing the, you know, the condominium projects, the personal insurance policies, just everything, all things insurance that you do for us here in the islands. Sue, thank you so much for being here with us today.
Well, thank you for that very nice introduction. I do enjoy the job and do understand your side of the business since my parents or mother was in real estate, and understand the real estate side and how important insurance is to it, and the mortgage side and everyone else that's involved. So yes, and of course it's our biggest asset for many people who live in Hawaii. You know, it is our real estate. So it's an important job which I enjoy doing. So thank you for having me. So
absolutely. Yeah, let's go ahead and get you started. I've got your presentation up and running, so just let me know when you're ready to advance the slides. And for everyone on this call, Sue is going to go ahead and present for about 20-30 minutes, and then after that we will open it up to Q&A. So get your fingers ready and type in your questions, and then and once she's done with the presentation, we'll go ahead and start answering your questions one by one. So go ahead and take it away, Sue.
Okay, well, thank you very much, everybody, for attending. What we're going to do today, which I've done in the past, is to take what's happening in the current year. But of course, the current year always reflects on what happened in the past. So 2026, what is going on? Next slide. Judy, next slide. There she goes. So we're going to talk each year separately, and we're going to start with 2023 because obviously 2023 was Lahaina, and it was the year that caused the turmoil that we have been seeing for the last several years. So we had the Lahaina fire. It causes huge increases in our property rates, and it's not so much the property rate, it's the hurricane rate. And the hurricane rate goes up because the fire, people who cover the fire are the same people who cover hurricane in our state. We are not a fire state like California, because they get rated up for their fires. We are a hurricane state and get rated up for our hurricane exposure. Now, even though we've not had a hurricane, knock on wood, for 34 years, 33 years, it's been, doesn't matter, we had a catastrophe. And to be a catastrophe, it has to be over $1 billion. So when you take the Marco Polo fire at $78 million, that's not a catastrophe, that's just a claim. Doesn't affect anything other than Marco Polo and their renewal and their carriers. But when you have a catastrophe and it's over $1 billion, it affects the whole state, and it affects all owners, whether you have a condo, whether you have a house, whether you have a car, because everybody's going to see that those three things skyrocketed, as well as your business insurance. So 2023, the Lahaina fires hit, and it's towards the end of the year. So a lot of quotes have already been sent out for October, September and October. So those people don't see anywhere near the impact that the people do starting in December, January, and February. So reinsurers increased our rates by at least 50% for the last 3 months. They had no idea how much Lahaina was going to be at that point in time. But what they did is they say, well, we're not going to renew at what we currently have because we know we're paying out. So they instantly did about a 50% increase. I'm thinking, okay, that's not bad. I'll let all the people know who are budgeting to budget at least a 50% increase on the property. Well, 50% wasn't enough, as people found out come January, February, and March. So we have the reinsurers going for the last 3 months of the rate of the year at a 50% increase. Companies, what happened with Lahaina that did not happen with Iniki was in Iniki, the companies actually left Hawaii. With Lahaina, they didn't leave Hawaii, but they reduced what they were willing to write. If I had a company that would write a $100 million building or townhouse, it said, we're going to give you 10 million, pow. Others gave us only 5 million. So they really cut back on what they were willing to write. So we had some condos that had 27 policies to get to the amount of coverage we needed. And we actually had one condo, we could not find a carrier who would write the last several million for it. So it was short. So it's really, I'm glad they stayed, but the cutback was so great from 100 million down to 10 or 5 million, and having to insure a complex of 80 million, 70 million, 100 million, 200 million. That's a lot of companies out there we're trying to get quotes from. And every time you add on another company, the price of insurance goes up because they have minimum premiums, they have taxes you got to pay on it. So it added to the grief, the fact that they cut back on what they wrote, but it would have really added to the grief if they left, because then we'd be back to square one with no companies. So we had a layer. That's what that is, layering the property coverage became the norm. Nobody would write, unless I had a $5 million building, a small little 3-story walk up, nobody was going to write the whole thing. Everybody's going to spread their risk. Even the people who spread the risk, say they're going to take 10 million, they spread the risk further. So I always use the Marco Polo fire as an example. First Insurance wrote that complex. We had a $78 million fire. First Insurance paid $4 million max. That's what they had kept. They reinsured all the other millions of dollars that the complex was insured for the other, let's say there was another $200 million worth of coverage. They reinsured that. And so the reinsurers, when they pay the claim, run the money through First Insurance, who then pays the claim out. So the insurer doesn't even know the money isn't coming from First, but it's coming from the reinsurers. So reinsurers are very important to Hawaii, because the maximum that any company here keeps, the right condos, is $4 to $5 million. Everything else is reinsured. Okay, so that's why when they refuse to write more than 4, 5, or 10 million, you have to layer. Okay, so what happens after 2023? Next slide. Judy's falling asleep. Next slide. There she goes. 2024 comes. January through March, the companies still do not know what it's going to cost this that we had in Lahaina. So they're only renewing 1 month at a time. So in January, let's say we had 50 accounts, condos renewing. We renewed it till February 1st or February 5th, or whatever day in January, March, in February. We had 1 month renewals. Then February came and they renewed it for another month to March. So now we've got double the work, because we've got 50 condos here and maybe 50 condos in March. I mean, in February, now we have 100. And then March comes. And March is also a big month for us. And so we had over 100. So now we've got roughly 300 condos that we are doing month by month. Fortunately, April comes. And in April, they determine exactly what they're going to be doing. But before they do that, they found out that our cost of construction after the Lahaina fire increased by 30%. So you figure a building insured at 10 million has to be renewed at 13 million. Okay, we had to increase the value on top of an increased premium. I had a complex that had to add $30 million to their valuation, a large complex, because everybody was underinsured. Whether you had a house or a condo, you were underinsured for today's replacement cost in 2024. Okay, so the cost of construction increases. April through August, they finally determined that the rates are going to go anywhere from 300 to 500% for wood frame, hollow tile, all non-poured concrete structures. These are just condos only, and commercial risks, not the homeowners yet, or the HO6s. Then September through December, prices are starting to drop. And never has it gone this fast. When Iniki hit, it took 2 years before the company started to reduce their rates. 2 years. Here in Lahaina, 1 year, not even a year, August to August, and now it's September, and the prices are starting to drop. I'm thrilled, and I'm thinking, this is wonderful. I'm getting quotes that are 15, 10% less than what they were last year. So September through December is a good 3 months. And I'm excited about it. I'm estimating people's renewals next year, and I'm giving them their figures for their budget, because all condos budget, and because they have to send out maintenance fees, and they want people to know what they're going to be paying on. So we're estimating a 15% increase. So it's a good end to 2024. Then 2025 comes. Judy, next slide. Now January through May, the prices drop another 10 to 15%. So we're now talking 20 to 30%, possibly most condos are seeing. This is great news. I thought for sure when in January, California had their wildfire, the very large one, like $200 billion. And I'm thinking, oh my God, my rates are going to go up again because of this. But the reinsurers called and said, don't worry, it's not going to affect Hawaii. So that was good news. And it didn't affect us. Okay. So our rates continue to drop January through May, about 10 to 15% more. Okay. But because the cost of insurance was so high and no one budgeted for it, not one condo budgeted correctly, including the 3 where I'm board president. Not one of us budgeted correctly. We had no idea. So there's about 375 condos in our state who do not have 100% of hurricane. And that costs a lot of problems for realtors and mortgage brokers and banks because you can't loan unless they're 100% insured. You do have Fannie and Freddie require it. So we have this issue with what are we going to do? So in June of 2025, and I praise the realtors, for those of you out there who are realtors, because they resurrected the HHRF that you insisted, that you pushed for back when Iniki hit. And it was the realtors who told the legislature, get this going, do something for us, and that's how the Hawaii Hurricane Relief Fund came about. But it was dormant since 1992. Okay, it did nothing. I mean, 1995, I think it was dormant, but it had money. It had probably over 300 billion at that time. Legislatures borrowed a little every now and then, but it ended up when it was time to resurrect it in June of 2025, it had 218 or 16 million dollars. So it went out and bought reinsurance. And because they're buying it and they don't have to make a profit, they just have to be able to pay the people who are going to work it. So it's not like an insurance company, they got a good deal. And so they were able to keep their rates low. So the HHRF is resurrected, and you realtors need to get a pat on the back for that. And thank you. So June 2025, things are looking very good. We, in that month, were able, well, let's go to the next slide. So certain rules came out with the HHRF, eligibility rules and requirements. First of all, it's a hurricane only, okay? Whereas back when Iniki hit, it was hurricane and property, okay? But now it's hurricane only because we have no problems with our property rate. We just have problems getting the hurricane. So you must have been denied full hurricane coverage by at least 2 state licensed insurance companies operating in Hawaii. No problem, easy peasy. The insurance agent can get that. I can get you 5 denials. We only needed 2. Okay, it's not a problem with that requirement. The hurricane sublimit counts as a denial of coverage. So for the company like Fireman's Fund, who was writing only 10 million as a sublimit, that was not counted as a denial, and you get 1 more, you're done. The building had to have a total insurable value exceeding 10 million. The reason being is this complex, this HHRF only would write above 10 million, but they would write up to 90 million. So if you had a $70 million building, you get 10 million from the market and the insurance market, and then you go to HHRF and you get your other 60, when I say 70 million, so your other $60 million that's needed. So, and it's a very simple application, and they're pretty good about getting the rates out to you, and they have 2 companies quoting the rates. So it's not like you have to wait a long time to get it. So you go ahead and you get this HHRF quote. So let's see what happens. Next slide. So, let me go into the details first, and I'll tell you what happens. Suspense. So HF provides hurricane only, as I told you, and it's commercial, okay, not for homes, not for residential. No, you say, well, condos are residential, but in the insurance world, there are commercial risk, okay? They are not a residential risk. It's excess above the first 10 million, and it's hurricane only. And they're gonna follow whatever let's say the hurricane hit, and let's say Fireman's Fund sends out their adjuster and you have $11 million worth of damage. They're going to follow what the adjuster for the first 10 million does and accept that as the rules. It's not like they needed adjusters to go out. It's not like they had to hire contractors. It's all going to just be handled by the carrier who has the first 10 million, okay? You have to purchase separate primary insurance to cover the hurricane losses up to 10. So if you have an $11 million building, you buy 10 million from the standard market, you could buy $1 million from the HHRF, anything above 10 million, okay? The maximum limit of insurance, but you had to buy all the property. Let me explain. So the $11 million building had to buy property of 100%, because remember now it's just the hurricane you buy in excess. So Fireman's Fund, for example, would sell you 10 million as a sublimit and sell you 100 million property with only 10 million as your sublimit. So you could then go to the HHRF and fill up that sublimit to the 190 million that you needed to get to 100 million. The property was still all insured with Fireman's Fund. They would take care of the fire, the lightning, they take care of wind damage, they take care of falling objects, the collapse of the building. But when the hurricane comes, Fireman's Fund pays 10 and the HHRF pays the balance. So the property, you still have to get 100% from the standard market. The hurricane is the only thing that you can buy separately from the HHRF. So they increased their value. They increased to 90 million in late 2025. They were in the beginning going to only offer 40 million max, and then they changed that. I'm sorry, they were only going to give you 50, and then they only going to give you 50, and then they increased it to 90 on top of that. So it's a good deal, and it's a great rate. You'll see in a minute. So that has a fixed deductible of 2%. So the underlying policy has to have a 2% for the first 10 million. Okay, so everybody gets stuck with a 2% deductible, which is very fair. Okay, and it covers replacement costs of the building and the business personal property of the association up to the stated policy limit in case of a hurricane loss. So Fireman's Fund would pay the first 10 million because the building got damaged and your lobby furniture is a mess and the resident manager's office has lost all of his business, all of the equipment, or the business personal property, the lobby furniture, the office equipment. That's business personal property. And then the building is an additional part of it, but it's all in the first 10 million. And then the HHRF would come in and cover the same things that the master policy covers for hurricane. Okay, next slide. Okay, next slide. There we go. So HHRF, this is the good part. HHRF is starting to bring down the cost, okay? We had a Mo'iliili condo. Replacement cost was, oh, you know what? You slipped, did you skip a slide? Go back to it. I think there's a slide before this. Maybe not. Oh, I know, okay. Okay, no, all right, we're fine. Sorry, my fault, not yours. So this Mo'iliili condo, its replacement cost was 50.4 million. Last year's secondary market offered the quote at 116,000. This year, the secondary market quoted 103. So even the insurance marketplace was bringing prices down. Okay, it was 116 the year before. Now in 2025, they're coming down to 103. So even their prices are coming down. As I said, the insurance companies start to reduce the price. The HHRF quoted $45,338 instead of 103. Instead of 116. The association last year, in the year 2024, did not have 100%, jumped at this for 45,000. So the secondary market quote, okay, is 37,475 post hurricane HHRF secondary market quote. So the market said, gee, we want to keep this condo, Sue. We like it. They don't have claims. We've been on it for years. We're going to offer even less. Instead of 45 for the HHRF, we're going to give it to you for 37. So even though the HHRF did not write this account, they saved money for the association because the HHRF was there and brought their price down to 37,475. So the HHRF caused the rate to go that far down that fast. So it's a good thing. Let's look at another condo. Next slide. Slowly, next slide. Okay, it's the Waikiki condo. Lots of condos in Waikiki. The replacement cost was 19 million. The secondary market quote was 38,993. The HHRF wrote it for $9,057. The company that was on this condo said, no, we're not interested in matching that, Sue. This condo's had claims, even though not a hurricane, we're not going to be bothered. Thank you much, we're walking. So that was okay. That was fine. We had a quote for less than $10,000. So savings due to the HHRF, $29,936. This is money that is saved that's in the owner's pockets because we don't have to charge them the maintenance fees. So in other words, if you have 100 owners and you're saying, I'm going to save you, $2,299, okay, that's money in their pocket. You're not charging it in your maintenance fees. So next, let's see what happened on the third. I think I have 3 examples. One more. Next slide. Okay, so the HHRF not only brought down prices for individual condos, they brought prices down to the market rate. All right, there's a certain rate companies charge, okay, and then somebody will charge lower, and things are going well, and we're having a quiet hurricane season, and gee, Hawaii hasn't had a hurricane, even though they had that fire and they're not a fire state. Let's reduce our rate. We want to write Hawaii. Why should we write California? Why should we write Florida? We'll write Hawaii, okay? So there's a large Kapiolani condo in 23 to 24. It paid 169 for a 100 million excess of their 25. Back then, there was a 25 limit they had from their carrier. Okay, they were not 100% insured. They could not get the last, they had 34 of their, we needed 125 more $1 million of hurricane insurance. Nobody was willing to write it because it was right after Lahaina, okay? Because they renewed right after Lahaina. We could not get anybody to write it, but that's okay. Back then, mortgage companies probably didn't even know they didn't have enough, and it was the very last layer, so it was no big deal. So 24-25, they paid $472,607 for 150 million, excess of the first 10, okay? In 2025, they paid 212. You can see the difference with insurance companies. It's coming down in price, okay? 472 was the high when they raised the rates. Then all of a sudden, 25, 26, it starts to come down. For the 153 excess of the 10, they can get all that they need. Again, savings up to the, that should be credited to the HHRF is this $260,153. So as you can see, the HHRF is been a wonderful, helpful for all of us here in Hawaii, okay? Whether you own a condo or not, whether you're a mortgage broker, whether you're a realtor, it's helped all of us in our business. It's made people like me again, instead of being upset and having to go to 5 meetings a week. I'm now down to 1 and 2. So it's been a boon for us as well. Next slide. So let's talk about give you sort of a summary about the HHRF. It is working. It is helping many. It's just having its existence is a threat to the insurance marketplace. So it keeps the rates down. And as long as we continue to have a quiet hurricane season, it will keep the rates down. It will stay down, not only theirs, but also the insurance marketplaces. So it's a good thing. And again, I keep on telling the realtors, thank you for all that you did to make this happen back in 1990-ish. We were wonderful. Boards don't have to worry how to get to the HHRF. Your agents do it all for you. So all the board has to do is say, did you quote the HHRF? Did you get me a better deal? And all the agents are going to get quotes, okay? No, the HHRF sometimes is not less. We have had times we've got to get an HHRF quote, and we have the standard market quote, and the standard market is less because for some reason it doesn't model well, the HHRF doesn't like something about it, and that's fine. They should have the right to pick and choose. So of course, those we would then place with the standard market, but you still know you're getting a good deal because the standard market has come down trying to meet what the HHRF would have offered or might offer. So it's been a good thing. Next slide. While we're waiting for the next slide, I will tell you, I was on the panel that was working on this HHRF thing with the legislatures, and my thought was, I'm telling nobody. Working with a bunch of legislatures, I bet we get nothing done. But I was amazed when they came out with this. And the day it came out, I ordered a policy the next day, and it worked. And it was like, what else works instantly once the legislature gets involved? So they get also credit for doing a damn good job. So what's happening in 2026? Okay, 2025 is good. We got the HRF, rates are coming down. People are much happier. They're not yelling as loud. Maintenance fees aren't coming down because people borrowed money to pay those huge rates. They may be assessed, okay? But so maintenance fees aren't coming down, but at least the cost of insurance is coming down. And that's usually most people's biggest expense in a condo is the insurance or employees. So what's happening in 2026? Premiums continue to drop. Even now it's January, February, we're still seeing a reduction from the standard market. Rates are coming down, okay? Deductibles are also beginning to drop. In other words, when we had Lahaina and we had the 2024 75,000 deductibles, all of a sudden we're all over the place. Some condos had 100, 200,000 rates, bad enough the premium, but then there was this huge deductible. So deductibles are starting to come down in 2026. The 75 is going to 50. The 50 sometimes is going down to 25K. So this is becoming, and 25K, 25,000 is becoming the norm nowadays. And that's good because sometimes it's 25,000 per unit for water and 25,000 for all other perils, but at least it's coming down from a high deductible. And the reason this is good and you want to know about it is because that means as a homeowner, I can reduce the coverage I have to buy on my HO6. My HO6 covers the association's deductible if I'm responsible for the claim. I'm cooking, I set the place on fire. There's a $75,000 deductible, and they say, Sue Savio, you caused the fire. All these people are getting paid by the master policy, but we have this deductible. You're going to be charged it, and they would charge me $75,000. So I have that coverage on my HO6. Now with a $25,000 deductible, I'm saving the premium of $50,000 or $50,000, and that's probably about $150, $125, $150 a year. I mean, it's not a lot of money, but it adds up. When you've got 100 unit owners, and now they can each save another $125 or $150. That helps in their pocketbook. So it's a good thing the deductibles start to decline. We also found out the insurance companies started in 2026 to say, okay, I can take more than 10. I'll take 50 million. I'll take 100 million. This is good. I still maybe can't find somebody to write more than 150 million on a $200 million building, but I don't have to layer as much. I don't have to have 27 companies. Maybe I have 3 or 2, maybe 4. It depends upon the size of the building. This also saves money because I don't have minimum premium charges and all those other expenses for the cost to just even issue a policy. So prices start to come down more. Companies take on more of the risk. This is what we like. We like to get back someday to where the company says 300 million, no problem, I can write it. You know, we're hopeful. So layering of companies is still necessary for larger risks, but only for the large risks. Okay. Then again, not 27 carriers, but maybe 3 or 4 max. So continue on. Next slide. Okay, so what's going on? So we had the hurricane, we had the condos, huge increases in 24, starting to come down in 25. All of a sudden in 25, the insurance companies who write the HO6s, which is for condo unit owners, the HO3, which is for a single family home, and the HO4, which is for tenants, okay, whether you rent a condo or a house, prices start to skyrocket, okay? These are standard carriers in our state who have to go to the insurance commissioner and go every year to say, here's what we wrote, here's what we paid out, here's what we made in profit. And we need a rate increase, they said. The insurance commissioner wants them to stay and write in Hawaii. If they continue to lose money, they'll leave. And we've had carriers leave because they're not making money in Hawaii. So he allowed certain carriers to get an increase in the HO3, 4, 6, and on auto as well. So what happened all of a sudden, even though the condo rates are going down, the unit owners, HO6s and HO4s and single family homeowners are seeing their premiums some as much as double. Okay, some only 50, 60%, some doubling, some 70. It's a, you know, it varies by carrier. What they reported is what they've lost. So he allows them a rate increase. I can't tell you how many people called and said, I was paying 300 and now they want 500. And I'm saying, pay it, don't let it lapse. Because besides the increase in premium, insurance companies, certain ones said, we're not going to write condos anymore. There's too many claims, water claims, and fire claims. And we had 3 fires already this year. In fact, there's a 4th one I'm reporting today. In 1 year, and it's only a few months old. Normally, that's a whole year's worth. But insurance companies, many said, your pipes have to be 15 years or younger. Others said your roofs got to be 20 years or less. You can't imagine all the roof claims because we have lots of high winds that aren't hurricane. So they got the standard the standard deductible for a roof claim. So you can get people who are out there saying, oh, and it's not, you know, I got 6 shingles in my yard. I need a new roof. Okay, and because the roof is old, we can't repair it, so we have to replace it. And so for the $500 deductible, plus the fact that their HO6 will pick up the association's deductible, they're getting a new roof. So you can imagine all the new roofs that the insurance companies put on in 24 and 25. So what happens in 26 is prices go up, insurance companies stop writing HO6s. There's some that are getting off of whole buildings. Every single HO6 we have in this building, we're non-renewing. We're going to send you a non-renewal notice. State Farm says 2 claims, we're done. Other companies say 1 claim, we're done. Allstate said if you're a landlord, we're no longer going to write you. Zephyr said if your pipes are less than over 15 years of age, we're not going to write you. Somebody else said the roofs had to be 20. So all these rules are coming out and people are being non-renewed by the hundreds. We get calls every day. They're non-renewing my building. Can you help me? You have to understand there's only so many carriers that write homeowners in our state. Insurance commissioner doesn't want to see them leave, so he gives them an increase. Some still left and said, forget it. We're not going to stay. So a lot of people are going to Lloyd's of London, to surplus lines carriers to write a homeowners that normally you used to be able to write here in Hawaii. So I tell people, like I had a customer call the other day, and as an insurance agent, no problem, I'll take your claim. Nowadays I say, you know, you lost your cell phone. It's a $600 cell phone. You got a $500 deductible. Don't report it. You know, we'll pay you $100, but you now have a claim against you. Save your insurance for something that is serious. Don't report small claims because they add up. 2 claims and many carriers are going to walk and nobody's going to want to write you. And your $300, $500 premium will have to go to the surplus lines marketplace, the secondary market, and could be $3,000. So why use your insurance for things that are not, you should be able to handle those things, okay? Some carriers put on a $2,500 deductible on an HO6. Most people have either 500 or 1,000, okay? But even if it's $1,200 claim, ask yourself, is it worth $200 to use this for my claim, okay? So anyway, that's where we're at today. HO6s are very expensive. People are having trouble getting them. When you go to sell something, if it's in a building that nobody will touch, it's a problem. So you got to kind of find that out, what's going on with the buildings that you're listing or selling or putting a mortgage on. So pipes, the plumbing, very important. Roofs, important. And condos with large deductibles are having a very hard time. I picked up a condo that had a $100,000 deductible. There were 35 people in that condo who could not get a HO6. So I got the deductible down to $25,000 per unit. I was able to call 3 companies and I said, they're on your blacklist where you won't write in them. But I've got the deductible down now to $25,000. Would you consider writing in this building? And I was able to get 3 companies who blackballed that condo to accept risks, accept HO6 policies. And that's our goal, is to try to get you back, the companies, the condos that are having issues, to get them back in the good graces of the companies that write the HO6 and write it at a competitive rate and with a good policy. So this has been it's been a problem this year in 2026, is the HO6s. Serious problem for anybody who owns a condo. And that's why I tell people, just pay it. Went up, just pay it. Somebody just called me today, Sue, it went up 130 bucks. I said, oh my God, is that all it went up? Pay it. He says, but now I'm up to $800. I said, pay it. You have no idea. $130 is not a big increase, not in today. He had a claim 3 years ago. I said, buddy, they used 5 years worth of loss runs. We're going to have to report that claim. Nobody's going to want to write it for you because of course all the claims are water claims. This broke, that broke, the pipe broke. Okay, so that's the problem we're having right now with HO6s and HO3s. Next slide. So in conclusion, so you get to ask questions next. Master condo rates are on the decline, and they're still declining. Not a lot now, but they're still going down, which is good because we're trying to anticipate next year. And of course, we're hoping we'll have a quiet hurricane season, so we can anticipate maybe another 5 or 10%. Not sure yet, but we're anticipating that. Maintenance fees probably are not going down. Now everybody's saying, well, wait a minute, you just saved 20, 30, 40, 50% on my premium. Why is it my maintenance fees going down? Because reserves need to be bolstered up. I'm a board president on 3 condos. Not one of mine are reducing our maintenance fees. We're going to put the extra money into reserves because you know what, ladies and gentlemen, nobody, I have 1 condo out of 1,100, over 1,100 I insure, that has reserves of close to 100%. Everybody else is somewhere, you're supposed to be at 50. I have people at 30%. Plus we had a slew of condos borrow money from reserves to pay the insurance costs. So it has to go back and it has to be more money put in. Plus, Last year was the first time ever you could put money aside in your reserve study to build up for sprinklers. Now, I know people tell me I'm under 10 floors, I got open stairwells, I passed the LSE, I don't need sprinklers. That's true, you don't now, but there will come a time when you will need sprinklers. It will be mandated. I think Hawaii, I've been told Hawaii is the only state that says residential condos, 3 stories and above, do not have to put in sprinklers. That will change someday. You know, granted, we're out in the middle of the Pacific. Nobody knows about us. We keep kind of quiet when it comes to insurance problems, but it will come. Maybe not in my lifetime, but for some of the younger kids, I'm sure it's going to affect us. So I tell people, put the extra money into your reserve. Build up your reserve because spalling hits. Pipes need to be replaced. You know, you got to paint your building. You got to do your parking lot. None of us ever, the prices go up so fast that we're not reserving correctly, because now you have to do reserve studies every 3 years, an in-depth one. So they're better. But the first 20 years of condo life, there was no such thing as a reserve study. Nobody saved money. Nobody even thought about it. Plus, we thought our price would last 50, 60 years like they do on the mainland. They don't. We thought our roofs would last longer. In fact, I just had a contractor put a brand new roof, and he told the owner it's guaranteed for 50 years, supposedly by the manufacturer of the tiles, etc. But he says, buddy, it's 30 years in Hawaii. Okay, so even though you're buying a 50-year roof, it's 30 years. Okay, so they just salt air, whatever, it just doesn't work. Our winds. So anyway, maintenance fees are not going down. So except I had one condo reduce them. Everybody else so far has not. Cost of construction rising. Okay, it has really gotten to be expensive. HO6 costs are rising. Okay, HO6 company is very strict now on pipes, roof, and electrical. They want to know years repaired and what you've done. And short of putting in sprinklers, maintenance is key to securing the best rate. If you do not maintain your condos, and there are lots that don't, you know, I've never been on the roof, they say. I said, we'll get somebody up there. They go up to the roof, they say, oh, we have plants growing up here. We didn't know we had plants growing on our roof. They weren't meant there. They weren't put there by anybody, just Mother Nature. So maintenance is huge with the insurance company. So thank you very much. And now I'll let Judy go into questions.
Thank you so much, Sue. Oh, amazing information. While we're waiting for the questions to come forward, I pulled out a couple of things that I thought were just super duper interesting. The first one, number one, you know, when we started doing this condo crisis analysis, you know, updates, I know that the number for condos that were affected was over 800 in the state, and now we are up around 375, so less than half, right? So right. What a good lift, you know, in the last couple of years. Another thing that you brought up, cost of construction is way, way up. I believe you said 30%. You know, one of the things that we've seen on our desk as loan officers is that when the appraisal comes in, you've got the sales comparison value. And then on page 3 in that little box, you've got the cost approach. If the whole thing burned to the ground, how much would it cost to rebuild it? And on many of the appraisals that I've seen, the cost approach, meaning what it would cost to rebuild, is much more than what the actual house is selling for right now. So if you bought it at 1.2 but had a big old fire, it might cost you 1.6 to rebuild to that same square footage and footprint. So I thought that was really interesting, because that's really indicative of where our home prices are now, that they have depressed that 10 to 15%, which of course all the forecasters are saying that our home value now with the rates coming down is going to start to go up as well. So we should rebound on all of that value over the next year to two. But this is definitely still the time to buy homes, because they're going cheap, you know, because of that cost to rebuild being higher than what you're actually spending to purchase a property. Another thing that I pulled out that you said that was amazing, the HO6 challenge. So now that some of our buildings have started to get their insurance back, The newest thing on the table is the actual homeowners themselves and the HO6 premiums themselves going up. And from the board that I sit on for my condo, I learned a big lesson this year as well in regards to, you know, a lot of the homeowners will say, well, you know, I pay my maintenance fee. Why don't we have our deductibles for each homeowner at 0? Why does it even have to be 25 or 50 or 100, like you said? Why can't it just be 0 so that everything for me as a homeowner is free? And I listen in that. I'll let you explain it to everyone why you would, as a board, you would not want to have that deductible for your homeowners be 0.
Okay, so if you want to not have to pay out on your own policy and always make the association policy pay. First of all, the association policy can only cover as originally built. So you still have to have your upgrades covered under your policy, and the association cannot cover those. But if you're going to have a 0 deductible, that means the association is going to cover every claim, because the association's policy has a deductible. So if it's 25 per unit, let's multiply 25,000 times 100 units. Okay, everybody, your new maintenance fee, we need to assess you an extra 2,000 roughly a month to cover the association's deductible. So now you have 2,000 for the association's deductible, and now we're going to charge you the regular maintenance fees on top of that. So here we go. So it's a huge expense to run around with a 0 deductible when you don't know you're going to have 1 claim, 0 claims, or 10 claims. You've got to cover that. So why would you want the association to try to figure out how much to do? Because they're going to say, well, we usually have 10, but we could have 20. They're getting older, so we're going to go 20 times 25,000 or 20 times 100,000 and charge everybody a fee. So you don't want that. You want everybody to carry their own HO6. They can have their own special deductible, 500, 1,000, 2,500, whichever they are comfortable with, to cover everything that the master policy can't cover and to cover the association's deductible. It's just, I would not want to have to pay the maintenance fees of having to cover people's deductibles.
Exactly, exactly. By making each homeowner responsible for their own unit at least a little bit, you're
Right.
decreasing the claims overall for the building, which means that when they come to renew, they can keep that wonderful new policy that they picked up instead of it doubling, tripling all over again because of the number of claims. Thank you for that, Sue. We've got a ton of questions, so let's go ahead and dig in. Let's see here. It looks like some of the first ones were answered. Okay, first one coming from Dave Ige. How much is forced placed insurance on an HO6 if someone can't get insurance on their individual insurance? Who are the large companies insuring these loans when they do have forced placed insurance? Just asking in case someone cannot get it.
Okay. So forced place means the mortgage company is placing it on it, because if you ask the insurance like us to force place, we can't if you have claims. So the ones who can't get coverage have to rely upon their mortgage company to actually purchase the HO6, and it's going to be 3 to 4 times what the normal price would be. So you're trying desperately to find somebody to write it. Now the HPIA, which is the Hawaii Property Insurance Association, because we're having such a hard problem with HO6, they are working on a program just like the HHRF to offer HO6 coverage at decent limits. They can't just offer us $5,000 worth of coverage because I got a $25,000 deductible. So they're working on that, and I was hoping they would come out with it the first quarter of this year, but they're not yet. And when they do, we will have that as a last ditch effort before we have to go to the secondary market and spend $2,000 or $3,000, or we have to rely on our mortgage company to do it, and that gets to be even more expensive. So it's really, there really is no company writing forced place other than what the mortgage companies use, or if we can get HPIA to do it, then that's where we would go. But right now, David, pray you never have a customer that asks you that question. I'm serious.
Thank you. Next question comes from Patrick O'Neill. How is the replacement cost calculated for condos?
Okay, it's done on, of course, the type of construction, whether wood frame, concrete, hollow tile. I mean, it all has different double wall, single wall, they're all kinds. Then it's based then again on square footage. And is it a high-end condo where the toilet was $1,000 or $2,000 versus the typical $500–600 style? So then it takes all that into consideration, the appliances, the upgrades that came with it, you know, and whether it's high-end, medium grade, or it's just basic. And that's how it's worked up. And then the insurance company puts in Hawaii's construction costs, and we have construction costs by island. Needless to say, if your condo's on Molokai, it's more expensive than it's to build if it's on Oahu, where we have people. So of course, they take that all into consideration. And this table, and they feed it into a program, and it's upgraded monthly. Okay, so the minute Lahaina hit, it went up $100 a square foot like that in days. Okay, so it's something that the insurance companies have, and I'm sure other people do too that use it. And it is geared by island, where on the island, and of course, availability. Hawaii's biggest problem, as we know from Lahaina, is we don't have the supplies. Everything was short. You know, we don't have enough toilets, we don't have enough sinks. So if it's just a small fire, it's not gonna be a problem. So that's how it's done: square footage and type of construction, and high end, low end, everything in between.
Yeah, and based upon my knowledge, the software that you're referring to is very similar, kind of like, you know, much more elaborate, of course, but very similar to what we may use from our seat for an automated valuation model software, except it's built specifically for condominiums, and based upon the different parameters that you're putting in, it spits out this building replacement valuation.
And then of course for us, we have many fires in our agencies because we do a lot of condos. And so I've never been short on my classification. The short one year was way back when I had a condo. It was $250 a square foot. Now we're talking a good 10 years ago to rebuild this condo. And I had it insured at $255. I said, that is too close. You know, I'd like to have at least $10 a square foot more. So I told my underwriters on renewal, you know, we got to go up. But we have fires, so we know what we're paying. We know what we paid for the Marco Polo fire. So we kind of know what the per square footage value is.
Next question comes from Lisa Crosby Torres. What is the perceived potential impact of tariffs on construction costs and the impact on insurance as well as reserve analysis for components?
Say that again. What is the?
Maybe condo, she means. What is the perceived potential impact of tariffs on construction costs and the impact on insurance as well as reserve analysis for condominiums?
Okay, so what is TERA?
Tariffs, the tariff taxes.
Oh, I'm sorry, you're talking about terrorist attacks? No.
No, tariffs, TARIFF, tariffs.
Oh, tariffs. Okay, sorry. Well, tariffs, of course, increase the valuation because supplies. So again, we're now looking at things going up even more. As you know, if you try to do anything today, price of construction has gone sky high. So again, gone are the 30 days. Maybe we're now into 40, 45%. So tariffs are a problem. We don't need them personally, I think, because it does affect a small island like Hawaii because everything comes in. We don't do much here other than grow some, you know, local food. So yeah, no, it's only going to cause more grief, higher replacement costs, higher construction costs. What can I say? Here we go again. Good question.
Thank you. Next question comes from Mary Shimizu. Residential rates for hurricane, your thoughts?
Residential for single family homes?
For single families.
So for single family homes, the insurance companies, I say locally, you keep up to 4 million. So if your home is insured for less than 4 million, you're just going to see the standard rate increase that they got from the insurance commissioner allowing it. If they have to buy reinsurance, they are buying it again from the same people. There's like 50 well-heeled buku bucks reinsurers who would sell it to the insurance company as well. So you're going to be paying about the same thing that a condo would, even though it's a single family home. But again, if your home is insured for 4 million or less, more than likely the insurance company is keeping all of that. And you would not see it much of a difference.
Perfect. Next question from Carolina Cristancho. The state proclamation allowed additional providers to come into the state. How has that affected insurance policies?
Nobody's come in. Nobody, you have to understand, Hawaii is not a great place to write business. They say it costs too much, you're far away, we have to hire adjusters, we can't have an office there, we don't have people there. And you're such a small state with such a small book of business with, you know, they want to go to states that are going to give them, like California, huge, lots of business. You know, we're a drop in the bucket to them. So we want to keep our carriers that we have, because if they walk out the door, no one's come running to write in Hawaii. They're just going to write it from the mainland, and we're going to have nobody local. So yeah, I mean, even though we say, come on down, nobody comes.
Next question from Jody Muse. As a realtor, where do you recommend we go to find the insurability of a condo building when we are doing our research prior to listing or making an offer with a buyer? What are things we should be looking for outside of the building insurance summary?
Okay, so when you get the summary, you should be calling that agent and saying, is this a condo that is blackballed by carriers because their pipes are in disrepair, or their roofs are bad, or whatever the case may be? Are there any issues that I should know about? Okay, because the insurance agent for that condo is going to know what's going on. You know, is there going to be an assessment? Well, yeah, because we told them they got to put new pipes in and they got to start now. Or no, we don't know of any assessment, check with the management company. So in other words, the insurance agent will give you some basic information that you need to know. Is it 100% insured? There are still about 50 condos that are not 100%. And they're not planning to be 100% because they still don't want to pay even the HHR rate increases, because it's still more than what they used to pay. And we haven't had a hurricane, Sue, so what am I worried about? Okay. And I'm concrete, so I'm okay. You know, you hear that all the time. And I say, I hope you are. I'm knocking on wood for you. Just in case you're not, you know, I've got it written here that you decided not to buy it. I offered it to you, you know. So you have to start with the insurance agent if you've got a new listing. And I get calls all the time. I got a listing, you know, is it 100%? Is there anything I should know about? Call the agent. They're a wealth of knowledge.
Perfect, thank you. Next question comes from Jan Anaye. Are you seeing and believe it's important for condos to still allocate at least 10% of HOA fees towards reserves?
Oh, I think they have to do more than 10%. Some condos, yes. I mean, think about it. You have an elevator. Maybe you have two. You have air conditioning. You have a roof. You have spalling problems. You got to paint a building every 10 to 15 years. I mean, you're talking big dollars. And the price of these things that when you did your reserve study 5 years ago is probably now double for what it is today. And I'm finding that out when we're having our new reserve studies done. We weren't saving enough. So at 10%, you're probably going to have to put more than 10% away. But it's going to depend on what your reserve study says, how high you are, what you are, the cost to fix your building, how old your pipes are. If you have to repipe, I mean, there's a condo in town, $17 million to repipe. There's a condo in town, in fact, who told all their owners, we're going to repipe. I'm not going to ask you to get permission to get a loan. I'm telling all of you, you owe $50,000 bucks. You got 8 months to come up with it. They're going to repipe, or they're going to put in sprinklers. Whatever the case may be, you've got these things hanging over your head. The more you have in reserves means the less you have to charge the owners. And those who are there today should be paying this because they've used up 20 years, 30 years, whatever the case may be. That's my belief.
Absolutely, I agree with that. I was at a board meeting last night and we just increased our maintenance fees. So of course, one of the owners stood up and she said, well, because we increased the maintenance fees this year and because we're going to be done with some of our projects, that means that next year our maintenance fees should go down, right? And of course, it goes back to what you just spoke about, which is there is always a new project looming right after that project. So even if it feels to the homeowner, we just got new pipes, we just got new exterior painting, we just got new spalling, everything's brand new, what could there possibly be to do? Or at least all the big projects are done. That's really not the case because the reserve study is going to outline all of the other things forthcoming. And when you're looking at the repairs or the upgrades for an entire complex, it's so expensive.
It is terribly expensive.
Because of that, they always need to build up their reserves. And like you said, a lot of the condo projects blew their reserves this year because of the loans they were taking, the interest they were paying into the loans, the deposits they were making along the way to the contractor to try to reserve their spot in the lineup, and all of those different things.
Right.
Next question from Linda Kua. Is it better to invest in a single family residence rather than a condo?
You know, I live in a single family residence. It's now 50 years old. I replaced my roof for $60,000. My electrical, I added onto the house, so it's okay because I did it then and replaced it then, but it was another $10,000 way back when I did that. My landscaping needs to be redone because it's old, okay, and it's looking tacky. So, I mean, you're still, and I don't say, like most people, we don't save for these things because we're not in a condo, but I don't have a pool, okay? Those condos that have a pool, you've got, some of you have exercise rooms, some of you have, you know, other things that are single family people don't have. You have to cover those things. I'm going to have a spalling problem because I do have some area of concrete, so I'm saving a little for that. I think it is probably, you have more amenities in your condo, or at least you have the ability to share the grief. I had to replace my windows at 50 years, and that's another thing condos don't realize. I had 2 condos, I had to replace all their windows. It's expensive to replace windows, and you're going to have to do them some year because louvers and things start to fall out and they hit people, and we've had that happen. So you don't have any idea of what you're going to have to do, but you're going to have to do eventually everything all over. Just like when someone buys one of these old homes that has the weeds that looks like nobody lives in it, and you buy one of these old homes, you think, okay, but you're going to gut it. And that's what most people do. They're spending $1 million for something that has nothing other than the nice piece of property in a nice neighborhood, and they're going to gut it, or they're going to add to it, and they're going to put another $1 million into it. But granted, it's Hawaii, so it's going to be worth over $2 million when they're done. But yet we put all this money into our homes, whether it's our home is a home or whether it's a condo. There's, I think, not much of a difference.
Thank you. Okay, so Sue, I think we are done with questions. The last comment is actually a thank you to you, Sue.
Okay.
And we are at 11:02, so if there are no more questions, everyone, we're going to let Sue get back to work because, like she said, she is busy. So
Yes,
thank you, Sue, for being here with HAMB today. Thank you for being here for our industry. Thank you for being present to help us with all of these things and always being so open and welcoming to our requests for education. We really, really appreciate you and everything you do for us.
Well, thank you very much. It has been a pleasure, guys. Maybe we'll see you next year. Good luck to all of you. Sell up a storm or mortgage up a storm, whatever you do. Enjoy. Take care. Aloha.
Thanks. Bye-bye, everybody. Aloha.
Aloha.